This is the CMC Connect Volatility Report. There's a definite end-of-term feel to markets as the Christmas break nears, with volatility looking subdued in most quarters. One key standout, however, has been the yen after the Bank of Japan decided to maintain its lax monetary policy and offered no clues as to the likely timing of any pivot. That proved enough to leave the dollar-yen trade to reverse most of last week's losses, albeit temporarily. One-day vol on the pair stood at 15.62% against 11.4% on the month, whilst the rebound in euro-yen proved even more resilient, with one-day vol here printing 14.82% against 9.96% for the month. That policy news was also sufficient to drive Nikkei 225 futures meaningfully higher, with the equity index finding support from the idea of rates staying low for longer. Ongoing support for equities globally in the run-up to the Christmas break could prove enough to see the index retest those all-time highs set in the summer. One-day vol on the Nikkei stood at 23.92% against 15.1% for the month. And natural gas prices remain active, with record high levels of production being offset by concerns over supply disruption from exports via the Red Sea. That's likely to keep price action elevated on the asset, which has now rebounded off last week's test of 6-month lows. One-day vol stood at 60.34% against 52.74% on the month.